Bitcoin, you could think of it as a city in cyberspace, 256 blocks across, 256 blocks long, 256 blocks high. There'll never be more than 21 million. 276 blocks is the right number. The cube root of 21 million is about 276. So if you imagine a city in cyberspace, 276 blocks on a cube, that is the immutable supply of that asset, and that's all there's ever going to be for 1,000 years, maybe for 10,000 years. Yeah. And so one day, all 8 billion people in the world want to live there.
Michael Saylor, a billionaire business executive and avid Bitcoin advocate, has served as the executive chairman of MicroStrategy, a Virginia-based business intelligence and mobile software company, since 2020. Since incorporating Bitcoin into both his personal portfolio and his company's operations, Saylor has fervently educated millions globally on the unique advantages of Bitcoin compared to traditional asset classes. With a background in aeronautics science and technology, Saylor possesses a profound comprehension of Bitcoin, enabling him to eloquently articulate why it stands unparalleled in the financial landscape. Saylor often likens Bitcoin to a virtual edifice, representing the cornerstone of a new digital financial paradigm. He envisions this edifice eventually encompassing a significant portion of the global financial system, distinguished by its distinctive features. Notably, Bitcoin's finite supply of 21 million units ensures it remains immune to inflationary pressures that plague fiat currencies. Unlike conventional assets, Bitcoin is characterized by its immutable, enduring, and universally desirable nature, accessible to anyone with a simple mobile phone, transcending geographical constraints.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I think the best way to think about money is there are three parts of money. There's a medium of exchange, a unit of account, and a store of value. Currencies are legal tender defined by a nation state. So the dollar is a currency in the US, and the peso is a currency in Argentina, and the real is a currency in Brazil. Currencies make good mediums of exchanges, and they will always be good mediums of exchanges wherever there's an effective government. Units of account tend to be the strongest currencies that people look to and coordinate with. So the US dollar is a unit of account in Argentina, even though the medium of exchange is the peso. So money trifurcates. Store of value is that aspect of money that is got the longest half-life. So if you think about what people use as store of value, they don't use the peso in Argentina. They might use the dollar over 10 years. But over 100 years, say in Western Europe or the US, people would use property like real estate, or they would use trophy assets like a soccer team or a football club, or they would use art, or they would use equity, like they would own Apple stock, or they would use the S&P index. They would own a diversified portfolio. So money itself trifurcates. There's 150 or 120 currencies that are mediums of exchange. There's maybe half a dozen units of account that really people care about. Bitcoin is the strongest store of value in the 21st century. And when I look at strength, I consider the half-life of the money. And what I mean is half-life is, how long will your economic energy or your capital last? And if you take money, $1 million, and you buy pesos with it, and they're running a 40% inflation rate, the half-life of the money is 18 months. You'll lose half of the money in 18 months, and then the next half of the money in 3 years. And so you'll be down to 12% of your money in 4.5 years. The half-life of money of your economic energy in the dollar is about 10 years, because there's about a 7% monetary expansion rate. If you had the $1 million, it would be worth $500,000 in 10 years. If you actually look at Miami Beach real estate, an acre of land in Miami Beach was worth $10,000 in 1930. It's worth $10 million today. That means that it's 1,000 times as expensive. If you do the math quickly, that means that the monetary inflation rate is 7.5%. And that means the half-life of your capital in the US dollar for the last 100 years is 10 years. Every 10 years you get cut in half. Doesn't sound that bad, but over 100 years, that means your 0.1% of your money is left. So dollar is isn't really a good store of value. What about gold? Gold's half-life is 30 years. Every 30 years, you double the gold supply under the best case. What about property? Well, then it's a function of, can you pay the tax? If you can buy land and you can afford the tax, actually, it'll keep going up, in value. It'll track that money supply. The value of Bitcoin is Bitcoin is the same thing as beachfront property in South Beach. It's like there's only 96 blocks. No government can make more than that amount of beachfront. And that's why it goes up by a factor of 1,000.
In recent interviews, Saylor has been endeavoring to reclassify Bitcoin as a digital asset rather than a currency. According to the billionaire business executive, labeling Bitcoin as a currency or digital currency is an outdated historical artifact. Saylor employs this analogy to refute assertions that Bitcoin lacks utility as a medium of exchange. He contends that the primary value proposition of Bitcoin lies in capital preservation. Drawing parallels, he argues that just as one wouldn't dismantle an artwork to purchase coffee or sell off portions of real estate for daily expenses, Bitcoin should not be viewed through the lens of transactional currency. During a CNBC interview in March, Saylor emphasized this perspective, asserting that while the medium of exchange aspect of Bitcoin may be valued at $1 trillion, its true worth as a store of value is closer to $100 trillion. He dismisses the notion of Bitcoin primarily serving as a medium of exchange, instead positioning it as a store of value competing directly with gold. Saylor advocates for a return to this discussion in subsequent interviews, emphasizing the core narrative surrounding Bitcoin's role as a digital store of wealth.
My first advice is don't invest your money, invest your time. Spend 100 hours. First spend 10 hours. Read the Bitcoin standard. Go take a course. Go look at some of the videos. Start to study it. And try to get to 100 hours. Everybody in the world works 100 hours every 2 or 3 weeks, their entire life to make money. If you're going to work 40,000 hours in the course of your life to make money, you might as well work 100 hours to keep it, right? So make the investment. Then I would say, once you start to study it, you'll realize that it's backed by 15 gigawatts of electricity. That's 15 nuclear reactors. That's a lot of electricity. That's all the electricity that runs the U.S. Navy. Imagine all the power in the U.S. Navy. And then you'll see it's backed by 600 exahash. That's all the computer power that Amazon, Microsoft, and Google can muster. Maybe you don't know how many data centers Microsoft or Google or Apple have, but you know that they're very valuable companies. And if I show you a network which is more powerful than them, you would think, okay, that's very tangible. You start to study all the companies that have backed it, Block and Fidelity and Coinbase and MicroStrategy and BlackRock, And once you start to see all of these organizations that are supporting it, you realize that there's a network of hundreds of millions of people, thousands of corporations, gigawatts of electricity, tens of billions of dollars of computing data centers, and hundreds of billions of dollars have been invested in this network. And everybody has one thing in common. They believe in the idea of digital money and digital capital. The world's got $900 trillion of capital, of wealth in it. And most of that wealth, it's stored there for when you need it in the future. So if I give you a lot of money, you've got to decide to invest it in the stock market, in the real estate market, or buy debt, or put it in a bank. They all have risk. Bitcoin represents a bank in cyberspace run by incorruptible software. It's for people that don't want to be their own hedge fund. Why should you have to gamble on a stock to not lose your money? Why should you have to trust a bank? Maybe you trust your bank, but what about the bank in Lebanon that stole everybody's money and froze it and then devalued it? What bank are you supposed to trust in a war zone? What bank do you trust when the currency's collapsing, right? So the world needs a bank it can trust. It needs a property that is beyond the reach of a government, a corporation, an individual. Bitcoin represents that bank in cyberspace that offers property rights to 8 billion people. You don't know it yet, but then again, you use an iPhone. Why does it work? Where does the music come from? Where do the videos on YouTube come from? Right? The world is going through a digital transformation. And I guess I would say this. It used to be only kings could listen to Beethoven. And then pretty soon you could listen to Beethoven on a phonograph record, and it got cheaper. And then pretty soon you could download an app to your phone for free and listen to Beethoven, and it got really cheap. Digital transformation of music, digital transformation of education, digital transformation of books, digital transformation of storefronts.
So while you're
They
saying
changed the world. What I'm saying is this is the digital transformation of money, of capital, of property. Right? If you want to give music to 1 billion people, you need digital music. If you want to give wealth to 1 billion people, you need digital capital. You're not going to give money and property rights. You're not going to give economic security to everybody on earth without the digital form of capital.
In the coming years and decades, Saylor anticipates a migration of economic activities and gains from physical cities to the digital realm. Despite its relatively brief existence of only 14 years, Bitcoin has swiftly established itself as the premier digital asset and the focal point of economic transactions in cyberspace. Consequently, it's poised to capture a significant portion of the economic activities and investments transitioning into the digital domain. Saylor advocates for a paradigm shift in the perception of Bitcoin, urging people to view it less as a currency and more as a monumental edifice in cyberspace. He contends that Bitcoin's true worth lies in its capacity to safeguard wealth across centuries, akin to valuable real estate or priceless artworks. Presenting Bitcoin as a digital property, he argues, more accurately reflects its function as a store of value rather than a medium of exchange. Moreover, Saylor suggests that the portrayal of Bitcoin as a currency raises concerns among governments and institutions. By reframing it as a digital property, he believes this shift in perspective could foster greater acceptance of the leading cryptocurrency, alleviating reservations among skeptics who argue for its everyday transactional use. Do you share Saylor's views regarding Bitcoin's status as a digital property? Your insights and comments on his conversation with Peter are welcome in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.